This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
A group of 7 nations' finance ministers discussed in a call on Friday further sanctions on Russia and possible tariffs on countries that they consider enabling its war in Ukraine, as the U.S. called on its allies to impose tariffs on purchasers of Russian oil. Canadian Finance Minister François-Philippe Champagne chaired the G7 meeting, which was held to discuss further measures to increase pressure on Russia to end its war against Ukraine, according to a statement from Canada, the head of the rolling G7 presidency. The ministers agreed to speed up discussions to use frozen Russian assets to fund Ukraine's defense, and discussed a wide range of possible economic measures to increase pressure on Russia, including further sanctions and trade measures, such as tariffs, on those enabling Russia's war effort, the statement said.
Oil prices rose on Friday after a Ukrainian drone attack suspended loadings from the largest port in western Russia, but gains were capped by concerns about U.S. demand. Brent crude futures settled at $66.99 a barrel, up 62 cents, or 0.93%. U.S. West Texas Intermediate crude finished at $62.69, a gain of 32 cents, or 0.51%. Early in the day, crude reacted to the drone attack on Russia's northwestern port of Primorsk, which led to a suspension of oil loading operations overnight, an official from Ukraine's SBU security service said.
Moving on to the top news in the energy sector.
Canada's government is in discussions with energy companies and the oil-producing province Alberta about eliminating a federal cap on emissions from the country's oil and gas sector if the industry and province reduce their carbon footprint in other ways, 3 sources with knowledge of the talks said. Canada's emissions cap has not yet been implemented through legislation, but the prospect of it has been broadly condemned by Canadian oil and gas companies who have said it will force them to cut production. Prime Minister Mark Carney, who won the April election promising to protect Canada's economy from U.S. tariffs, has faced some criticism for stepping away from his Liberal Party's previous emphasis on the environment.
The European Union could phase out Russian gas within 6 to 12 months by replacing it with U.S. liquefied natural gas, and the United States communicated this position to EU officials this week, U.S. Energy Secretary Chris Wright told Reuters on Friday. Wright was speaking in Brussels, where he met EU Energy Commissioner Dan Jorgensen on Thursday to discuss ending Europe's purchases of Russian energy. The EU is negotiating legal proposals to phase out imports of Russian oil and gas by January 2028, with a ban on short-term contracts kicking in from next year. I think this could easily be done within 12 months, maybe within 6 months, Wright said, of how quickly the EU could phase out Russian gas. Next, we have the top news in metal markets. The European Union's aluminium sector is urging the European Commission to impose duties of around 30% on exports of scrap metal to stop it flooding out of the bloc and leaving domestic producers short. EU aluminium scrap exports hit a record 1.26 million metric tons in 2024, according to industry group European Aluminium, around 50% higher than 5 years ago, with most heading to Asia. The EU industry says the situation has since worsened due to US President Donald Trump's import tariffs, which were set at 50% for aluminium but only 15% for scrap. That's boosted scrap imports into the United States and reduced exports, pushing Asian buyers to focus more on EU supply.
Copper prices hit a more than 5-month high on Friday, lifted by expectations of US interest rate cuts and concerns over potential supply shortages. 3-month copper on the London Metal Exchange gained 0.2% to $10,069 per metric ton by 1600 GMT after touching $10,126, its highest since March 26. The metal is up by about 15% this year but has repeatedly struggled to sustain gains above the psychological $10,000 level.
We will now look at the top news in the agricultural sector.
Russia, the world's largest wheat exporter, increased the wheat export duty almost threefold to 495.9 rubles, $5.91, per metric ton starting on September 17, the Agriculture Ministry said on Friday, despite a decline in exports. The ministry did not provide a reason for the increase, but duties typically decrease during the slow summer export season and begin to rise in autumn as exports become more active. At its peak in December last year, the duty reached 4,768 rubles, $56.87 per ton. The export duty for barley remained at zero, as in the previous week, while the export duty for corn increased from 0 to 398 rubles per ton.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.